And the stock market is exploding and the memes are coming in hot.
Good afternoon.
So a lot of people seem to think that the stock market is about to explode and maybe go through a great reset. And that tends to happen anytime the Federal Reserve talks about interest rates. A lot of people are wondering, should we buy this dip? But is this the actual dip? Or is that just the dip of the dip? Or are we in the dip of the dippity dip dip? And that's because the stock market lost a substantial amount of money this week. Even my own portfolio of blue chip, stable, dividend-paying stocks is down $30,000 in 1 week. Even Bitcoin was oversold this week. The entire market's on fire. And when I saw this, I was like, it can't be that bad, right? I'm sure tech stocks are doing fine. Like, what's Tesla at right now? So Tesla's not doing that good either. No one is safe in this market, and I want to know what the heck is going on, because apparently we've been lied to. Inflation actually reached 18% in 2022 using the old method of calculating it according to Larry Summers, and that's actually twice as high as what we were originally told about inflation. Also, CEOs have been selling hundreds of millions of dollars of their company's stock. The IMF just issued another warning to the US about our debt spending, and Papa Jerome Powell might not be coming in to save us anytime soon by dropping interest rates, which is crazy because most people thought that by this time interest rates would be down. But he is about to drop something pretty soon, and rumor has it, it's a banger.
I'm too cool for the rules, baby, get off of me. Never need no push, I do it all for me. Keep a couple real hitters, got them on call for me. Money moving, got it in the market where it ought to be. Too true for the flex, baby, don't cap to me. Drop 50, bring 150 right back to me. Keep a couple real hitters, got them on call for me. Money.
The Fed's like, oh, you like EDC? Well, this is EDC FOMC style. But as someone who is a magician who I think has mastered the art of misdirection, I really want to explain exactly what's going on. Because did you notice that I'm wearing a different shirt, glasses, and a different watch than I started the video with?
Magic.
So let me explain exactly what's going on, why people are scared of the stock market, and why I'm personally still investing. So let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the epic meme intro, compliments of Wall Street bets. So there's a lot of bad news happening to the economy that's causing people to worry. Some of those reasons are good, some of them not so good. But arguably the biggest reason why people are afraid is that they're afraid of war or global conflict.
Breaking at this moment, Israel under fire from Iran.
It's just raining rockets.
We do effectively have World War III in progress.
So the threat of geopolitics is always a bad thing for the stock market in the short term because the stock market doesn't like not knowing something. But in the long term, war profiteering is definitely a real thing.
Some of you may die, but it's a sacrifice I am willing to make.
Now, I was able to find the data going all the way back to 1939, and it turns out that throughout every major conflict, the overall long-term effect on the stock market was all positive with an average return of about 11%. Another theory why investors are selling off their stocks is because we just had tax season, and that's when investors like to sell their losing stocks to offset some of their winning stocks, and that's done to lower their capital gains taxes, which is also done through a process called tax loss harvesting, so there is a little bit of that going on as well. Another reason I've seen people selling off their stocks, though, is because people feel like there's something wrong. They're seeing in the headlines that CEOs and company executives are selling off their stocks. And the headlines look like this. Jeff Bezos unloads $2.4 billion worth of stock in Amazon, and it's all part of a plan. Mark Zuckerberg sells almost $500 million worth of Facebook, and Jamie Dimon completes sale of $183 million worth of Chase Bank. And that sounds terrifying. And the media knows that if you read those headlines, you're gonna wanna click on it. Trust me, I would know. I do YouTube for a living. They're my competitors. Not really. Well, sort of. Because if you read that some CEO, especially a CEO of a major bank that's too big to fail and he's selling off his stocks, you think, should I be worried? Maybe billionaires know something that we don't, but the truth is, even though this seems like fresh news to us, like a good magic trick, reality isn't always what it seems. Like for example, Jamie Dimon's strategy was disclosed in October of last year. Mark Zuckerberg's $500 million sale was announced at the end of 2023. And I just don't think that he could know what would be happening this far into 2024 unless he's actually an AI robot.
Oh, hi, Mark.
But Jeff Bezos did recently sell some of his Amazon shares, and maybe he does know something that we don't, or he needs to pay for his 2 Miami mansions that total $147 million and his $500 million super yacht. I gotta say, that's a sick yacht. I'd have to ask him something if I was ever on that thing. Like, Mr. Bezos, do you like Bitcoin?
Hell yes.
Actually, the real reason that Jeff Bezos sold is none of those reasons, because he also announced that he was planning to sell way back in November 2023, and the real reason that he's selling is to lower his capital gains taxes. He wants to reduce his 7% capital gains taxes by moving away from the state of Washington, which is where he was for 3 years, to move to Florida to live closer to his parents. So the real reason is because he wanted to pay less in taxes, not necessarily because he thinks there's something wrong with the economy. So once again, misdirection. Now the reasons I just shared with you, I don't think are real reasons to be concerned about, because that's the misdirection part of the magic trick. That was designed to get us to talk about it and to create buzz. But there are some real reasons that I am concerned about and that I do pay attention to, and here's what they are. By the way, this is gonna get a little confusing. Sometimes I get confused, so press the J button on your keyboard to go back 10 seconds and you'll get unconfused. So there's 3 major problems. Problem number 1 is inflation, aka how fast prices are going up. So this is where we were at the height of inflation, and this is where we're supposed to be going. Thank you for that assist, LeBron. So that way is the way we're supposed to be going, towards 2%. But right now, we're at 3.8%. So inflation is effectively twice as high as where we want it to be. So that's problem number 1, inflation. Problem number 2 is the interest rate, which right now is extremely high. But it's high because we're trying to slow inflation down. But the problem is, even though we have a high interest rate, inflation is not slowing down. It's climbing back up again, which is a very bad sign. So that's problem 2. And problem number 3 is the national deficit. The US as a country is spending and borrowing much more money than it has. And this is such a big problem that even the IMF, the International Monetary Fund, just put out a warning saying that the deficit is posing a significant risk to the global economy. The amount of money that we're spending that we don't have is expected to keep going up. The US is spending so much more money than it's making that we'll have a 7.1% spending deficit by 2025, which for context is 3 times higher than the 2% global average for other advanced economies. But a part of me thinks we should all be proud, because like my parents always taught me, if you're gonna be the worst at something, always be the best, Andrei. So those are the real reasons, the 3 main problems that are keeping the stock market going up and down and losing some of its value. Now, even though the problems that we have are fixable, no matter what solution economists can think of, every time we come up on a dead end. It's almost like we're perpetually stuck in Yugi's Millennium Puzzle waiting for Papa Pal to break us out. Kinda hope they draw into their Pot of Greed, Kaiba. Allows me to draw 2 cards from my deck. Wait a minute, that's Time Wizard? One sec. There we go. Pot of Greed, Kaiba, allows me to... So let me just show you some of the possible solutions so you can think like an investor, and hopefully you can understand this crazy stock market and then explain it to me, because I still don't get it. So here's one of the solutions that the government seems to favor. Print more money. And we can, but we also kind of can't. And the reason is because anytime we borrow money, the US does that by issuing debt. The way it does that is by flooding the economy with treasury bonds. Treasury bonds, remember, are the things that people buy, that they hold on to, that they collect an interest rate on, and it's considered to be one of, if not the safest investments anyone can make, because it's backed by the full faith of the US government. Except there's a problem with our bonds. No one wants to buy them. And that's because when the stock market is doing good, like it is, or was, we can't get people to buy bonds because on a risk-adjusted basis, stocks make them more money. So how do you get people to buy the country's debt? You do that by offering them more money, and you do that by raising interest rates. So think of it like a dividend stock. A lot of people chase dividend yields. They buy the stocks with the highest yield, and then they lose their money on the principal and the expense ratio, but that's a story for another time. But the point is, that's how you incentivize people to buy something. You offer them an interest rate they can't refuse. Except we can't offer a higher interest rate because we can't afford to. We just can't afford to borrow more and then pay trillions in interest alone because there's already a major deficit in spending. So we can't incentivize by raising rates, But we can't lower them either. Because here's the thing. Of course, as consumers, we want lower interest rates because we can borrow money cheap, we can buy more houses, we become wealthier. As investors, of course we want lower interest rates because all the things like stocks and real estate and Bitcoin goes way, way up and we become rich. But we can't lower interest rates because that's what hurts the lowest income Americans the most. So what's the answer? No one knows. There's 3 possible outcomes that people are betting on, and that's the hard landing, soft landing, and the relatively new one, no landing. 7% of economists today think that we'll have a hard landing. A hard landing is for the people that believe that we should keep interest rates as high as possible for as long as possible just to fix inflation, even if it means the cost of a recession and the cost of people losing jobs. 7% believe we'll get a hard landing. 54% of economists believe that there will be a soft landing. And that just means the path we're on right now will eventually get us to 2% inflation, no one will lose their jobs, and that's called the soft landing, which 54% believe will happen. And then 36% of economists believe there will be no landing. No landing means we won't really lose any jobs, but we also won't get inflation down to 2% where it needs to be anytime soon. The economy will just continue growing at some determined rate. Now, if I had to pick one of these 3 camps today, I'd be in the no landing camp. But that can change over time, and that's just my very wild guess. But the truth is, I don't know. And even though I can take an educated guess, I'd still never try to time the market. The CME Fed Watch tool shows that there's a 96% chance that interest rates will stay the same, so higher for longer. And that just means that stocks and other assets will have to suffer for a little longer, at least until the Fed comes in and tells us they're for sure gonna lower interest rates, which they might. They might come in and surprise us because elections are coming soon. And even though the Fed tells us they don't get involved in the political process, there is a chance that they do get involved, they drop the rates, assets go back up, people are happy, and the government gets reelected. That could happen. And even though I understand all this, I'm still not gonna gamble with my money because I'm not gonna try to time the market. And even though I've shown you all these bad news about the stock market and the economy, I'm still gonna continue to invest in the market and dollar cost average. And here's exactly why. What you're looking at on screen are the average returns of different kinds of assets. But the one to pay attention to is this specific area here. That's the 20-year return of your average investor. And what it really shows is that a lot of assets, whether that's oil, gold, real estate, stocks, bonds, they all make money, but somehow the average investor significantly underperforms all the assets. And that's because of times like this. People get scared, they listen to the news, they sell, and they lose a lot of money. But someone out there will eventually be right. They'll be called a genius. They'll make millions or even billions, and they'll get their 15 minutes of fame. And that's when you'll have to remember that they might have been right for all the wrong reasons. It's not because they necessarily knew what was gonna happen, but it's because statistically, someone has to be right some of the time. So just remember that before you buy their course on how to become a millionaire. That's why instead I dollar cost average into the S&P 500. I continue to buy my blue chip dividend stocks that are boring, and occasionally I'll buy some Bitcoin as my plan B, but understand that no one understands anything about the economy or where it's going, so don't panic, keep on doing you, smash the like button and subscribe. And as always, have a wonderful rest of your day, grab your free stocks, links are down below, and then go track them automatically with the spreadsheet link down below in my Patreon. Love you, thank you so much for watching this video. I'd love to see you back here on Monday and Friday, sometimes a Wednesday. I'll see you soon. Bye-bye.